All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We have 3 triggers on the board here today, and we have 2 of them that are very similar companies, Chevron and ConocoPhillips. Intel, very different company. And so we're going to go out and make some trades here. But one of the things I wanted to show is this is the first time where we, during this challenge, have to resort to the sorting methods, right? The last time we had a bunch of signals and only traded one was Under Armour. That was a pretty easy decision based on the options. With just where some of them were just ridiculous. So it made it pretty simple. But here we have Chevron, we have ConocoPhillips. The options are both about the same. They both have earnings during the life cycle of the trade, or the life cycle of the option for the trade. So we do have to resort to the sorting methods. And so I jumped on a little bit early before making the trade just so we could go and do that. And the first sorting method is to look at the sevens. Just look at the 7-day, 7-week, 7-month moving averages, right? And so I'm going to come in here and I'm going to put on a simple moving average of 7, and this is 7 days, and you'll notice that ConocoPhillips is trading above it, right? They all will. It's kind of a parameter to get a signal. But Chevron also above the 7, right? Okay, great. What about the weekly? Here's Chevron. It's above the 7-week moving average. Here's Conoco. It's above the 7-week moving average, right? Okay, they're neck and neck. Here's monthly. Conoco's below the 7-month moving average. Chevron, it's above the 7-month moving average. So, going with Chevron. And that's simple. And you could argue it's a little arbitrary. And, maybe you like Conoco more than Chevron. And, bottom line is both are probably going to go the same direction. But, going to run and trade Chevron here with that. If they were both equal on the monthly, then we'd look at the tied up versus tied down, the 50, the 100, the 200-day moving average. And, if they tied there, we'd go to liquidity and the smallest option spread. So, anyway, that's that. So, going to go out and trade Chevron. Also going to go out and trade Intel here. Now, we do have a trade on the board in Under Armour. And it's about where it was this morning. Option value right here is 230. So let's go fill that in here, 230. And, we're up, $240 on the trade since it started. Nothing really to write home about. Still stuck around this 11,000 level in terms of total gains. Tomorrow afternoon, Under Armour comes into the auto exit date there with it. Okay. All right. So gonna go out and trade Intel. Gonna go out and trade Chevron here as we go forward. So let's go make it happen. Okay. We have about 7,000 in cash. So I'm gonna put about 3,000 on each trade, somewhere around that level. And let's start with Chevron, shall we? Okay. We'll start with Chevron. I'll come back and fill out the spreadsheet here in a moment. But we'll start with Chevron. Let's just come into the options. And the options here on Chevron, we have this 125, right? This August 125 call position here. And this will encompass earnings. And, in terms of, I believe the earnings are the 25th, somewhere around there. So chances are we won't be in the trade by earnings, but the option does have earnings priced in. So I'm going to do 10 contracts here and see if I can get it for $3 and filled me no problem. So in Chevron, 10 contracts at $3 on the 16th of August. 125 calls. Whenever it fills me that fast, what do you know? The stock's going to tick down in the minutes that follow. But in there on Chevron at $3, 10 contracts, 16th of August, 125 calls. Okay. All right. Let's go fill in the data here for it, and let's get the average true range. Average true range on this is $1.57, so we'll have that here. But Chevron, there are calls. Today's entry date 7:10 p.m. Right, and option entry price $3. So that's easy. 10 contracts, and let's see here. Get this, just so they don't look so funky. There we go. Stock entry price. So stock price is let's see, last 125.32. 125.32. Average true range was what, $1.57? Yeah, $1.58. So we'll go $1.58. Stock exit level, boom. Stock profit level, boom. And current stock price, again, that 15-minute delay there from Google. So it's don't rely on that for the absolute current stock price. Auto exit date's going to be 3 days. 3 days from today, right? So we are looking at the 15th. So Monday the 15th, afternoon session. Okay, and then 2 days after that for the green exit date, the 17th there. Okay. All right, so there we go. Cash in is 3,000, and trade is open. Okay. All right, so in there on Chevron, easy peasy. Okay. All right. Now that leaves Intel. Now Intel's a very interesting one. It is one that is a trigger, but the stock's been going down all day. The stock's been dropping all day. And, never all that comfy to be a buyer in that condition, in that situation, as it's just been, it opened up and it's just been pretty much bleeding all day. I am verifying the 3 and the 7 are still crossed up, and they are. So good to go. And going to go and make this trade on Intel. The options on Intel also have earnings here in play. I'm going to go with the 47s. Okay, I'm going to go with the 47s here. And these are just the regular monthly August 47s. And going to do, let's see, 14 contracts, I believe, was the number. Let's go down to lucky number 13 just for some good luck there. And, I'm just going to do a market order. And we'll hit go. So 225 is my fill price there for Intel options. So let me make sure the alerts go out here for that. Intel INTC price 225 was my fill price. Doesn't look like I'm getting the best fill prices. So 13 contracts, and again the 16th of August. 47 calls there on Intel. Okay. Make sure the alert goes out, and boom, there we are. Good to go. All right, let's go. Let's go fill her in. Here in the challenge sheet. So we have Intel, 7:10 p.m. 16th of August, 47 calls here on Intel option price, option entry price here. Let me grab it here. Okay, 225, 13 contracts. Now stock entry price was 48.03. ATR 99 cents, 0.99. So that gives us our loss exit level, gives us our profit exit level. So 47 and basically 50. And then current stock price here. Get that filled in. And then this is going to be the same dates as, same exit time stop dates as what we saw for Chevron. Okay. Cash in about 3,000, just a little bit less there. There we go. So we are in and off and rolling here. Okay. Just double checking the alerts went out on both, and boom, there they go. 16th of August, 125, 16th of August, 47s. Okay. So we're good to go. Easy enough, right? Easy enough. Not a whole lot of decisions to be made there. Not a whole lot of drama to be made there. We know where our outs are, and we'll run here with those. Okay. We did see the Fed minutes come in here this afternoon. And market didn't really react all that much to it. We saw the market try to bump up a little bit on it, but really, right here on S&P futures is the minute chart here today. We saw a few point bump up, and then that gets sold into a little bit, and market kind of just hanging out where it's been. A lot of differentiation out there today. I mean, you look at things like Twitter, and I had a big day yesterday, down today. Caterpillar, Honeywell. In fact, Honeywell, very interesting because this morning it came close to having a bullish trigger, and this Honeywell's just a great example of why the morning parameters are much tighter than the afternoon parameters, because this is a higher probability. This type of reversal, just a higher probabilities in the morning, right? And so the parameters in the morning are definitely tighter, and you say, well, that makes us miss out on Chevron getting in earlier, and yep, you're right. But it also takes away some of that, whipsaw risk, and more importantly, some of that stuff that doesn't actually close as a trigger by the end of the day. Because let's face it, a lot of the elements of the market, what traders' decisions are, come down to, what investor decisions are, come down to closing prices, not open prices, not middle of the day drama, not he said, she said. It comes down to some of the closing action that we see in various names. Okay. All right, so into Chevron, into Intel. ConocoPhillips had a trigger here today, but did not trade Conoco as we do not have the cash for it. Chevron kind of won out in that game there. And if we come in and we look at the options for Conoco. Let me show those to you here real quick. You'll see that if you take a look at the 60s, you get similar, risk reward. You get similar, numbers to what you get with Chevron, and both of them, do have earnings that are coming up during the life cycle of the options. So Chevron earnings, you can see the earnings right here, the 26th. ConocoPhillips earnings are the 30th. So, not a big difference there. Chances are we're not going to still be in the trade by earnings, but should we still be in some of the trade by earnings? Definitely no problem holding it and running with it through earnings. We've put the $10,000 in gains that we need to see in order to hold something over earnings, and so we are in that position to be able to do so. And granted, it's a little bit more risk there with it, also a little bit more reward potential. And as long as we have some strong gains into the challenge, I'm more than willing to run with that and to do that. Okay, you're going to notice here on the video recordings sheet that some of the video links have not been added from the last 3 days. That will be fixed. Those will be added, but probably not here until tomorrow. But you can still access these videos in the archive if you want to go back and see them there. Okay. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.